You're listening to Smart Metals Radio from the Hard Assets Alliance.
Hello and welcome to today's show with me, Andrew Duncan, coming to you from London in the UK. Our special Smart Metals guest today is the geologist Brent Cook, who is also the founder and editor of Exploration Insights. He's up in the mountains of British Columbia where he's been skiing, and today we're going to be talking about the junior resource sector, whether it's going to start pulling up or not soon, and what stock investors should do with their holdings. Hello, Brent.
Yes, good day, Andy. Thank you for the opportunity here.
It's our pleasure. Now, the junior mining sector's taken quite a bashing in the last couple of years, and it's left a lot of people feeling very bruised. How do you feel about the current situation?
It certainly has been rough. The GDXJ, which is what I sort of track myself against, is off, or has been off about 75% over 2 years, which has been pretty brutal. I think my view of this year, although it's tough to call, is that this is going to be another rough or bouncy year. It's starting off great, but I think it's going to level off and be rough and bouncy. But this is the year to start accumulating the best of the best in this junior mining and exploration sector. Because I think looking down the road, 2015 and beyond, it's going to become apparent to the general investing public as well as the mining companies that we do need new economic deposits.
So do you think people should avoid investing in indexes then, which track every company in a particular sector?
Well, it depends. I mean, I obviously don't do that. I feel that, with a bit of insight and knowledge, you can pick the best of the best, say pick 20 or less companies and do reasonably well against an index in a rising market, but do considerably better than the index in a falling market. And so that's my view. If you're willing to put the due diligence into that, or have someone who is an expert in the field to advise you. But if it's just you're playing the market move, then the indexes are fine.
And how are the majors doing at the moment? Do they have enough deposits to keep going, or do they start to need to start acquiring soon?
No, that's a really interesting point, and that's the fundamental basis of what I'm doing now in Exploration Insights, is that with the drop in gold price from 16 down to 12 or 13, a lot of their deposits are becoming marginally economic to uneconomic. When you look at their all-in sustaining costs, it runs between $1,300 and $1,600 an ounce. They can cut back on development costs, exploration costs, that sort of thing, but that really doesn't knock that much off their all-in costs. What they're beginning to do, and are forced to do, is begin high-grading their deposits. And by high-grading their deposits, they're pulling the best, basically the guts out of it, and in effect sterilizing a lot of the ounces that are marginal and making so their reserves and resources become waste. So looking further down the road, they do not have the deposits or the reserves to replace what's being produced. And on a global scale, we're producing in the order of 85 million ounces from mines. They're going to be in trouble. They're going to be desperately looking for new deposits.
If gold drops below a certain magic price, let's say $1,100 or $1,000 an ounce, is there some kind of magic price where suddenly a whole lot of mines just get shut down?
Well, I think a sustained price at $1,200, $1,100 or less, we are in real trouble. I gave a presentation at the Cambridge show that shows the production has been flat for the past 5 or 6 years, more or less, but the tonnages have tripled or doubled, yet the grade has gone down by half. So what they're doing is mining more and more tons at lower grade to keep production level. If the gold price does not rise, they cannot keep mining those tons because the grade goes down and then production goes down. So I believe what we're going to see this year is, if the gold prices don't kick up above 13 or 1400, they're going to start slowing down and cutting off their marginal deposits by the end of this year, and that's going to cause them serious problems going forward, because they're not putting money into developing or exploring for new ones, and they're shutting down the marginal ones. We're going to see, we're going to start to see a decline in global gold production.
Now, I've heard rumors that the Chinese themselves are digging gold out of the ground at $2,000 an ounce. That's just to get their hands on more physical. What do you think of those rumors?
I suspect they're accurate. I mean, it's difficult to get real hard data out of what's going on in China, but what we do know is there are very few large deposits. So most of this production is coming from small, probably environmentally destructive mom and pop type operations that have been going for decades, if not centuries. They've got to be getting depleted. They've got to be getting more expensive to mine. And although China has ramped up and claimed to be the biggest gold producer in the world, I can't see that being sustained because it's just, I know that how the geology works and how the mining works, that they've got to be mining stuff that is marginal at best.
And do you think, do you have a view on whether they're trying to create a gold-backed currency or not?
Well, I think all the data suggests that's what they want to do, is eventually, make their currency the dominant one globally, and to do so, you want to have a lot of gold to back that up. So there's little doubt in my mind that they are accumulating as much gold as they can, and it's not a short-term plan. This is a 5 or 10-year plan.
Now, that's in the Stalin tradition, isn't it, of 5-year plans? That would do amazing things to the gold price. Now, Doug Casey, in his recent book, Right on the Money, has said that people should hold physical gold for security, and they should speculate with gold stocks to exploit the volatility on the upside. Now, if I was to give you $1 million, and I was to give you a choice of gold and silver and gold mining stocks, what would your proportions be for investment?
Well, what my proportion is, I don't own much physical gold or metal per se. I'm pretty heavily invested in the junior mining and exploration sector. So right now I'm probably, 50, 60% junior mining and exploration stocks. The rest of it is scattered in a few high dividend stocks and cash. And I got cash scattered in the US and in Canada.
Now, of course, with upside volatility, that's great, but there's also lots of downside volatility in mining. What's your basic method for picking the right mining companies and avoiding the wrong mining companies?
That's a really good question, and it's critical. I mean, my background as a geologist, I've worked all over the world, been involved in exploration through feasibility studies and bank audits and such. So I really focus in on, number one, the quality of the deposit or the potential quality of the project that's being explored by an exploration company. I need to see what the tons grade might possibly be, then start figuring out as quickly as possible rough estimates of what it's going to cost to mine it, process it, capital costs, jurisdictional risk, all that sort of thing. And then it comes down to people as well. I published a rules of thumb for junior mining and exploration investors and speculators on my website that goes through, there's probably 25 different rules of thumb in there that I think are helpful to anyone looking to get into this sector. But you've really got to be diligent in your analysis of the data. And we know that 90% of the stocks that climb up the exploration curve are going to go right back down it because it's so difficult to find a real deposit. You can still make money on what ends up being a bust if you're careful enough and analyze the drill data and such closely enough to pick the fatal flaw ahead of the crowd. So that's, there's two ways to go about this. I always want a discovery, but if you can pick the fatal flaw ahead of the crowd, you still can make money.
Now, the whole point of investing in gold, of course, is waiting for the gold price to eventually go up. Now, if we go back a few years and look at a lot of people's predictions, by now gold should be well over $2,000 and silver should be well over $50. When do you think these prices are going to be reached if you had to take a bet on those two prices?
The honest answer is I don't know. There's a lot smarter people that can figure out what the gold or silver price is going to do down the road. I think, from my perspective, what's really important to figure out is that we know there's a crunch coming in terms of new deposits coming online to replace what's being mined. So regardless of what the gold price is or silver price, if I can identify a deposit whose production costs are going to be in the lower third on a global basis, that's all I need to own with and hope that the metal prices go up.
Now, for people to pick out the correct stocks, they often need some help. Just before we go, can you tell us a little bit about Exploration Insights and what you actually do?
Oh, yeah, I'd love to. Thank you. I started this in 2008. It's an investment letter basically focused on what I'm doing with my money in this junior mining sector. What I'm buying, what I'm selling, why. I'm not paid by anyone to say anything, so it's completely independent. And, we also talk a lot about the mining sector in general, evaluating projects, those sorts of things. So that's what we cover, and it comes out more or less once a week.
And Brent, where can our listeners find you online?
Right. My website is explorationinsights.com. And you can Google me. There's a number of videos and interviews scattered across the internet.
Thank you for your time today, Brent Cook.
Thank you, Andy.
Subscribe to Smart Metals Radio on iTunes. You can also visit us online at hardassets.com/radio, where you can subscribe to our free mailing list and receive our free Smart Metals newsletter. For anyone who wants to set up an account with the Hard Assets Alliance, as a special offer, we shall be waiving opening and setting up fees. Listeners who'd like to speak to a live rep to walk through the registration process can call 1-877-727-7387. That's 1-877-727-7387. Thank you to Brent Cook for joining us today, and I'd like to thank you for listening too. Until next time, goodbye.